I have been visiting overseas recently, and many friends from China have asked me, what do you think about the future development of China's furniture industry? I reluctantly replied, it's just another cycle of internal friction in a stock market. Looking back at the past decade, especially from 2013 to 2020, China's custom furniture industry experienced a period of almost crazy rapid growth. In just 6 or 7 years, it has gone through a development path that took European and American countries 2 to 3 decades. It seems glorious, but in fact, it's flashy. When we look back at the dividend of growth, we must ask, what exactly has such development brought? Is it the steady maturity of the industry, a substantial breakthrough in technology, or the improvement of the quality of life for the general public? Unfortunately, the answer is none of them. In Switzerland, I visit a family-owned custom furniture company with fewer than 50 employees, which has been operating for a century and focusing on manufacturing. During the conversation with family members, I was deeply shocked. They had no radical expansion, no dazzling capital moves, but step-by-step product upgrades and bit-by-bit equipment innovation. What may be most invaluable is the company's annual sales of more than 100 million euros. But what is more worthy of our reflection is their ecological environment. Relying on reasonable profits from manufacturing, they have achieved continuous investment in technology and the long-term development of the enterprise. This is a positive cycle that a healthy industrial should have. Profits nourish innovation, and innovation feeds back the market. Some people may say, that's because they have an incremental market, but that's not the case. Europe has long-term entered the stock market. However, the key lies in how they manage this stock market in a sustainable and valuable way. This is the result of the joint thinking and effort of the whole society. On the other hand, what is the competition logical of the domestic custom furniture industry? Stage 1, compete on price. Stage 2, compete on good-looking prices. Stage 3, compete on price that they are low to no bottom line quality. What about technology? Laser edge bending technology, which has been popular in Europe for decades, is still regarded as the industrial ceiling in China. Some boards that are positioned as middle range internationally are packaged as high-end symbols in China. Doesn't this mean that our ceiling is set too low? I have no doubt about the diligence and intelligence manufacturing ability of the Chinese people. The country has been advocating technological innovation and manufacturing upgrading, and I fully support this. But the problem is that the public society value has gone into traffic first, eyeball economy, and the short-term returns. We think we are working very hard, but in fact, we are plundering the remaining value from each other. This cycle is not equal to the furniture industry. I recently heard that the 3 major online food platforms have launched a new round of the price wars, frantically spending money just to compete for who will deliver milk tea. At the same time, the market value of Nvidia in the United States has exceeded $4 trillion, leading a new era of global AI technology. It's all about burning money. One is invested in the forefront of technology, and the other is trapped in traffic internal friction. You tell me which one represents the future?